South Africa. Inflation surged to a 13-year high in June, according to data released Wednesday, moving further away from the central bank's target the day before an interest rate announcement. Headline consumer inflation quickened more than forecast to 7.4% year-on-year in June. Analyst expectations were for a rise to 7.2%. It was 6.5% in May. Joining us to discuss further, Toamy Mayowa, who's an analyst with Financial Derivatives Company Limited. Toamy, you're very welcome. Good afternoon to you.
Thank you for having me.
Fantastic. So let's start with South Africa. What do you see as the triggers behind this inflation print?
This inflation we're seeing is now actually a global phenomenon.
Yep.
I mean, you just saw UK's inflation surge to 9.4%. So it's really not. And the stoking factor are actually, common amongst each countries. And what we are seeing now is higher energy costs and also higher food prices. For South Africa, the fuel prices rose to about 45%. On an annual term. And so we are seeing all that, raising, inflation in South Africa. So that's what we've been seeing so far in South Africa.
And so the Monetary Policy Committee meets tomorrow. They're going to be making their own rate decision. Do you think this inflation impacts the benchmark rate?
Yeah, considering the fact that, the inflation rate is now above its target rate of 6%, definitely you would want to raise its rates, at least by probably 50 basis points. We should see that hike in order to be able to taper inflation. And so I believe the Monetary Policy Committee will want to raise rate in order to rein in on inflation. And I think that we're going to see that coming.
All right, so let's go to Kenya. What do you make of this disbursement of 235 million for budget support and so on and so forth, considering we know what the IMF does, the conditions that they're going to be asking for?
Yes, considering the fact that Kenya's economy grew by about an average of 7.6% in 2021, and also showed a strong growth in the first quarter of 2022 at 6.8%. It's a signal that they are, it's a signal of a resilient economy, and so that is supporting the fact that IMF could. And also then we are also saying that their tax revenue grew by about 22%, to about $17.2 billion, as at June 30th. And so it also helped it cushion partly cushion the effect of the rising fuel price and also the food price. So it helped it to support that spike in fuel price and food price. So that supports the basis for which the IMF actually approved the loan for Kenya.
And I guess there's also the issue of trying to alleviate debt issues that Kenya has with part of these funds, fiscal structure and so on and so forth. What's your read on Kenya's debt situation?
Kenya's debt to GDP ratio is about 68%, if I'm not mistaken. And so it's still quite sustainable. But with regarding to its debt distress, a situation whereby, having to fund its debts, is hampering major fiscal reforms. That's what I mean by debt distress. Concerning that, the IMF actually downgraded its the risk of external debt distress, from medium to high, and also its debt carrying capacity was also reduced to a low point from the strong point that it was before. And so, considering that fact, this has actually, we can say that Kenya is at the risk of a debt distress, of an external debt distress, and like I mentioned initially, that would actually could stall major reforms in Kenya economy if this risk is expanding.
And they have an election in about 2 or 3 weeks, so it does raise the urgency in that nation. What about Tanzania? Similar story as far as that.
For Tanzania, like you said earlier on, Russia-Ukraine war is actually exacerbating the economic challenges that it had been facing from the COVID-19 pandemic. I mean, its its inflation rates came in around 4.4% from 4% in May. It came in at 4.4% in June. And so we've seen, despite the fact that subsidy payments are being made on fuel, we are also seeing that the price of fuel is still rising, just like we are seeing in Nigeria too. So that is also pressuring up or pushing up transportation costs in Tanzania. And so this loan is coming in a time, although it's coming in a time where interest rates are rising, but then they just have to get these funds to be able to cushion the effects of the Russia-Ukraine war that is already exacerbating economic issues. And also there are many programs that the Tanzania government is establishing, and they really need funds to be able to, in order to support the the structure of the economy, such that it will reduce its dependency on its import dependent, its wheat imports, to be able to reduce its wheat imports in this time. So because we know that one of the reasons why this Tanzania's inflation is rising is a result of food prices, which wheat is a larger part of it. So there are many structural reforms they want to do in order to to have a strong economy that will be able to cushion the effects of what we are seeing in Russia.
And as far as all the support programs, because it's not just the African nations, I think Sri Lanka is also looking at having, Sri Lanka said that as of yesterday, so they were in talks with the IMF. I think Argentina, or Tunisia is North Africa, but even outside the continent, the IMF is trying to assist all these other Latin American nations and so on that are having issues. Does the war need to end quickly? Is that because it seems like, and we just saw a clip of Vladimir Putin in our last segment where he was saying that Europe is only punishing itself by trying to cap oil and this talk of cutting gas supplies. So it looks like he's ready to take this as far as it goes. Is there any respite for the Tanzanians and the Kenyas and the Ghanas and all these other nations that are trying to get assistance? It seems like the longer this war goes on, the more trouble for them. So is the only respite for the war to end quicker, as soon as possible?
Yes, but to a large extent, we cannot influence that.
Exactly.
What we can work on is, building, buffers to be able to resist the shocks that we are seeing. And so that should be the focus for a lot of policymakers in these countries. So once this focus is, built in, because we cannot, in fact, many people had, projected that the war in Ukraine would not last this long. But unfortunately, we are seeing it last long, and we don't even know when it's going to end. And so we cannot continue to wait for it to end before we do what we are supposed to do. And that's what we've seen with Kenya, we've seen with Tanzania, getting these loans to be able to build buffers for their economy to be able to withstand these economic shocks that we are seeing so far.
We'll see how things play out. It's very fascinating stuff. But Toamy Mayowa, analyst with Financial Derivatives Company Limited, thank you so much for joining us. Appreciate your time.